Let's do this. March 18th, 2020, pre-market update. We're going to go into gold here first. We're sitting at 1497 here. We're getting towards the session lows. It looks like it's got some weakness. And I'm gonna talk about why here in a minute. Silver also has weakness. This is the daily on the silver. It's coming down. Another down day for silver. Let's go back to gold here real quick and go to the daily. I think it's always good to look at the dailies as well as hourlies. So the daily, you're putting in a pretty bearish candles there. So let's talk about this real quick. Why? Well, let's look at the markets. I think they've limited down. I haven't seen a move for a little while, so I think markets and pre-trading have limited down. Let's take a look at, see what's going on around the world here. Everything's down. Okay, here's oil, $25.33. Okay, guys, we are having another day like that. Okay, so I think you're going to see, more margin calls, more of everything going down, everybody going into cash. Cash is king. Something else that was interesting, though, was interest rates. Okay, so we are holding tough on the 10-year, and it's up to 1.1% right now. So I think you're looking at something really strange. Typically, what we've been seeing is rates going down as what we've been seeing is rates going down as the market goes down. But now you're seeing the market go down and the rates go up. So I am a little bit, I don't know. It's, did we see the rates bottom out? Are we seeing them lose control of rates? I don't know. I wouldn't say that just yet. I would say they'd be comfortable with the 10-year scooting up a little bit. But just remember, we have a lot of debt, okay? Our government has a lot of debt, and a lot of that debt is in short-term paper, okay? So the last thing the Fed could do is lose control of interest rates. So I'm not in any way saying that's what's going on here, but sometimes I wonder, what's going to happen when people pull out of bonds too, and literally just go into cash, and the U.S. Treasury is market is not seen as the prime asset that it's been for a long time. So if you start to see anything like that, really hold on. You got a white knuckle ride coming to you. One of the reasons I say this is because let's take a look at the news here real quick. People are calling for print and print and print. They are not going to let this system collapse in a deflationary collapse. Okay, it's not going to. They will inflate this thing. Okay, here's a great article by Griertz here on Zero Hedge. There was another one. Okay, I wanted to talk about this for a second too. Ohio unemployment skyrockets by 600%. You have to think about the implications of what's going on here, and I do this only as I don't want people to be afraid. I want them to be pragmatic. if all these people stop working and all these businesses stop operating, every single person, every single business has debt to service, and they need a running business or a weekly paycheck to service that debt. When that debt does not get serviced, those loans go bad, and the people holding those loans can't service their debt. Okay, so what you could see here is a major credit event coming from this. Okay, I don't know what they're going to do. I can't predict the future. There's many people. There's a lot of people been talking about this credit event for 20 years, pushing. Uh, it's been kind of, it got to the point to where you would just become desensitized to the rhetoric, because the Fed was so capable of maintaining control. But I would be very concerned about what's going on here, and if things don't start getting a little bit uh, more under control with this, I don't see how you don't really come out of this with a huge scar. I mean, this is pretty big. Okay. Um, the news is pointing to some pretty choppy waters here. And I think ultimately, just keep in mind, ultimately assets are going to be what's going to be of value. Digits on screens, I don't know. I mean, of course, I'm not one of those people that think the dollar will be worthless. I think that's kind of crazy. You'll always be able to buy something with the dollar. But I do think that you could see a substantial devaluation of the dollar, upwards of 50% in the blink of an eye, against hard assets. So if an asset's overpriced right now, you're going to see that probably come down. If an asset's underpriced right now, due to people wanting to speculate on other assets that are going up, then that asset in return will end up going up. Okay, so just keep in mind, you can't live out of balance forever. Okay, things have a way of reverting back to normalcy, one way or another. So anyway, that's it. That's the pre-market. Let's see what happens after today. I think it's going to be a huge day. I think we're going to be talking gold down, touching 1450, and the Dow down, touching probably 18.5, something like that. Who knows? All right, let's keep an eye on this and be safe.